think it varies depending on the territory because we do cover quite a wide spectrum. We do cover the whole APAC region. So, for example, in countries like Japan, they'll be concerned with basically the mid to large size catastrophes, the frequency of catastrophes that have occurred very recently in the last couple of years. In generally for most countries, I would say the competitive market on the direct side, where premium rates have been decreasing, and how to maintain a profitable P&L underwriting profit from their point of view. For territories where they have got RBC regime, for example, and where there are a lot of insurance companies in that particular market, being ensuring sufficient capital is also an issue, and that's where perhaps they'll be looking for reinsurance to play a part. For myself, because I cover Japan as one of my major markets, I would say the impact of climate change and how it affects catastrophe losses. In the recent couple of years, we have seen quite a couple of mid to large size catastrophe events in Japan that has hit the Japanese market. So we would like to understand more about the frequency of events, which may be cyclical or could be a long-term trend. And we're also looking at how the severity has changed when an event hit. On top of this, one other thing that we are also concerned would be basically that the last couple of years we have seen still influx of capital. There's no lack of capital in the reinsurance market, despite large cat events since 2017, where we had him and cat events in Japan last year and this year. The last couple of years we have not really seen a hardening of a market despite a couple of large events. So one of the concerns would definitely be still the availability of capital in the reinsurance market. With regards to catastrophe in Japan, we are doing quite a fair bit of research as well as studies. We are looking at basically trying to understand the models itself, the catastrophe models that are available in the market, whether they are sufficient for pricing or we need to make some tweaks with regards to that. Also, we are also looking at understanding the underlying policies. How has the underlying policies changed potentially over the couple of years? Whether that does affect the catastrophe losses in terms of a severity perspective. In terms of the capital, basically the availability of capital in the market, one thing we are definitely firm about would be that we are very underwriting profit driven. So we look at every treaty to ensure that there is a technical profitability before we participate. But of course, that said, long-term key relationship is still very important. That's still the utmost importance for us.